directorships have been a great place for retired professionals. Maybe it's retired accountants or Bay Street lawyers or investment bankers to really pad their retirement. And not all of them, but that's just, again, the incentive structure is such. And so you have corporations, public companies that are managed by management teams and board of directors that may have a fiduciary duty by law, but they don't have an incentive in terms of ownership. And so oftentimes when we find a company, we'll come in and we'll be the largest owner. And oftentimes we'll be the largest owner of the management team and the board combined, right? And so our view is we can bring a strong ownership perspective, because oftentimes it's the top 5 holders are ETFs or large mutual funds, where in many ways they're sort of absentee. And the Bill Ackman example was a great example of that, where I think this was a great Canadian business, been around for a really long time, that had seen complacency creep in, that had been reflected in its stock price. And he came in, became the largest owner, brought in a great operator in Hunter Harrison, and turned the company around. And a lot of people in Canadian, the business society didn't like getting their feathers ruffled, but ultimately it created a lot of value. Canada is really small. And we're really polite, generally speaking. And so you might have a situation where there's an asset management firm in Canada where they see something with the business they're invested in that should be corrected. But then they go and look at the board of directors list and they notice that they have a bunch of clients on that board of directors. And so the tone from the top is, you know what, guys, sort of either sell the stock and move on, but we're not gonna ruffle any feathers.